All right. Hello, everybody. Welcome back. We've got some stuff to talk about around Robinhood and PayPal. Okay, so what do we have going on? First of all, thank you for being here. Thank you for joining me. I will be streaming the Robin call at 5 p.m. That's the one I'm a little bit more interested in than PayPal, but we will definitely be talking about PayPal and Robinhood on Finance Junkies as well. So at 5 p.m. in about 30 minutes, we'll be streaming the call. Okay, top line metrics both companies beat. PayPal was expecting, I think, 7.28 billion in revenue. They did 7.29 billion. Earnings per share, they came in $1.16 in line. So they didn't miss on any of the top line metrics. I don't know about the other metrics. I have to go deeper into them. I'll pull up their deck in a second. But overall, they did fine. Robinhood was expected to lose 1 cent a share, and they became profitable today at 3 cents a share, which is beating expectations by a lot. Their ARPU went up from $77 to $84. Their assets under custody went up 13%. The only problem is they lost 1 million users when it comes to their monthly active users. I do not think that is a big enough thing to be worried about at all. Like I really don't think so. And I'll give you the bull and bear case for why that's happening. But the street doesn't like it. So as you can see, it's down right now 5.14%. It was at $12.44 down to $11.83. We haven't seen 11 in like 3 weeks. So it going down to 11 is a pretty mean drop. And then PayPal, this one is just, I don't know if anyone knows what metric I'm not looking at because I haven't gone that deep into it, but down 7% at 67. Like, what did PayPal do to Wall Street to get them to be this upset over a company that's valued at 2018 levels? Like, what competition is so substantial that PayPal not absolutely beating on every single metric is going to tank it 7% after hours? Or is all of this happening because of freaking Fitch, which I said yesterday on Finance Junkies, I had a feeling even if PayPal and Robinhood do well, as I said in the last 5 minutes, Fitch might just destroy the whole market, even though it's irrelevant. It's absolutely irrelevant from what I've understood about today. But maybe, the expectations today, given the macro, are just not that good. And that's why this might actually be another great buying opportunity. That's what we have to discuss in this call today. So let me pull up Robinhood's deck and we'll talk from there. Let me look at some of the comments and then we'll keep going from there. So Hood losing users is huge. No other metric is going to shine with that one out there. Sorry about your calls. No, my calls are actually going to be, remember, I bought my calls at $9, guys. So unless it goes back to 9, I'm not losing any of the money on the calls, and the calls are for January 2025. So I'm actually not worried. Unless I hear something in this earnings call that is really off-putting, I'm not going to sell off calls that I got at the cheapest levels in the past 5 months. I mean, I could have got them at $7 or $8, but $9 was cheap when I got them. Especially when they're profitable. Now, I got to hear about this user growth thing, but look, so my thing on the user growth, let me pull up the deck real quick. The user growth is something that's going to, here's what the street is thinking. Okay, you're profitable because of the $212 million of net interest revenue. When that goes away, because interest rates are going to come back down, your profitability is going to be a gimmick. The counter narrative is that when interest rates go down, stocks go up. It's not rocket science. Interest rates go down. That means it's less of a yield you're getting from treasury bonds. So you put your money into riskier assets that are not as risky because the return is way better than the risk into stocks. When that happens, stocks go up. When stocks go up, people trade. When people trade, the thesis is they're going to use Robinhood to do the trades. Robinhood doesn't need to be the biggest brokerage in the world. They just need to be one of the brokers that's the easiest brokers to use, and the acceleration of user growth is going to happen. The average revenue per user is going to be even better. The transaction revenues are going to go up. Imagine when crypto starts mooning again, and not even crazy mooning. Imagine Bitcoin gets to 40,000. A lot of that crypto revenue is going to go to Robinhood. So the thesis on user growth decline is that we're in a more bearish market and people aren't using Robinhood, which is fine. But if the next 6 to 8 months is not a bear market like 2022 and we see increased activity, then the user growth should accelerate again and there should be no issue on that. So I don't know if that's a good enough metric for the street to just tank the stock, right? Like, imagine Facebook lost like 10 million users or something. Like, Facebook's already very big. I'm not comparing Robinhood to Facebook, but if they put up the numbers, which in what I'm looking at the quarterly results, they have absolutely, 3 cents a share when you were expected to lose 1 cent a share, you are putting up the numbers. I don't know if that's the biggest reason in the world to drop them. So let me pull this up right now and keep going it from there. You're losing theta if it hits $9, brother. That is also true. One of the things, and please let me know in the chat, I would love to get your opinion on this. I was researching on calls yesterday. Theta decay starts to hit about 5 months before the expiration date. And so I don't know if theta decay is as relevant on leaps as it is on on leaps that are within 3 to 5 months of expiration. At least that's the research I did last night. I was reading a couple articles. I could be wrong on this, but from what I read, theta decay doesn't start hitting until 90 days from expiration. So until then, which is the whole benefit of leaps, you have a lot of time. Now, if this were June 2024 calls, if this was February 2024, yeah, theta decay would be a bitch tomorrow. But I think because it's January 2025, I have about 6-7 months before theta decay really starts taking off. But I could be wrong on that. Okay, so here we go. So net cumulative funded accounts, they increased 70,000 accounts quarter over quarter. Again, the problem is those accounts aren't that big, right? Only a couple grand. Monthly active users, this is the big one, down 1 million. Assets under custody is up 13%. That's another thing, bro. They increased their AUC 89 billion. They're almost at $100 billion under custody. Like net deposits at 4.1 billion, 21% annualized growth rate. That's because they're offering the highest yield. You can get even higher than SoFi. Total net revenue is 486 million. Adjusted EBITDA 151 million, up 31% quarter over quarter, up 10% quarter over quarter on revenues. GAAP net income, this is up $536 million quarter over quarter because they actually were able to, get profitable. And earnings per share, 0.3 cents earnings per share. It wasn't bad. I mean, it wasn't bad. So net cumulative funded accounts increased by 70,000. Okay. Not amazing, but not the worst. MAUs decline. Again, I gave my thoughts on this. This bump we see from Q4 2022 to Q1 2023. Remember, this was bearish this time. This is February to May. So that's why I'm also confused. How come from February to May, you gain 400,000 users, but then from May to June, where the market's actually ripping, you lose 1 million users? It's a little confusing. But from what I can assume, when the market starts ripping again, this trend shouldn't happen. Remember, all this decline is when the market was tanking off. From Q3 2021 all the way down here, the market was shit. The market's improving now, so hopefully we see a reacceleration of that. Assets under custody up 13%. So again, $89 billion. That's amazing as well. Net deposits, this is amazing. $4.1 billion, not bad at all, especially in a little bit more of a bearish market turning into a bullish market. So that's really good. Average revenue per user, this is up as well. Now, this might be a little confusing because if you're only dividing by 10.8 million, your ARPU is definitely going to go up because you have a smaller denominator than you had before when you were doing it by 11.8 million. But it does mean they're still getting some more money out of their users, the ones that are using the platform, which is important. Net revenues, 486 million, up 10% sequentially. So this is not too bad. Net interest revenues were 234. Other revenues were 59, and transaction-based revenues was 193. Now, this is the other decline we saw from Q1 2023 to Q2 2023. We saw a $14 million decline in transaction revenues. What that signals to me is that May through June still wasn't the bull market we are all hoping for that creates this massive trading on Robinhood if it declined 14 million. Now, is 14 million the biggest in the world? No. I don't think it's enough to tank the stock, but 14 million is definitely a decline. And as a result of that, that's probably why Wall Street is not that happy as well. That trend goes against your thesis. That is correct. I mean, that trend does go against my thesis, and we will see, what happens given my thesis on that. For those that just want full transparency, I have $5,000 invested in option call debit spreads on Robinhood, and I'm currently up basically $5,000 on those option spreads. So tomorrow I expect that 5,000 that I'm up to probably be up maybe only 1,000. And so it would be a $4,000 loss overall, probably still up 6,000, but we'll see where the options go tomorrow, or we'll see if the dip gets bought up. The stock price right now, is the dip getting bought at all? It got bought up a little bit from the lows at 1150. It's at 1191. So the dip has gotten bought up a little bit from 1150 to 1191, but still down from $12.41. Transaction-based revenues are down. Net interest revenues were up. Again, this is because of interest rates. So when interest rates go down, this thing's going back down to, like, as you see, 63 million, 55 million back in Q2 2021, Q1 2022. But that means stocks should go up. And when Enphase starts mooning and Tesla starts mooning, people will be buying it on Robinhood. That is my thesis. And if that's the case, then we should be able to see transaction-based revenues go up a lot. Transaction-based revenues, let's look at this. This was transaction-based revenues. I want to go back to 2021. Yeah, look at this. Q2 2021, transaction-based revenues was 451 million. That has declined substantially to 193 million, and that's because of the bear market. I don't think we need a Q2 2021 AMC GameStop to the moon thing. I think we just need, even if we got 300 million on transaction-based revenues, that is almost 85% of the total revenues just off transaction base if we got to 300 million versus 193, given that we came in at 485. And that interest revenues will still be close to like 100 million, which is not going to be bad. We're going to be growing at almost $600 million a quarter. So we got to see what happens with that. But that seems to be the explanation for why Robinhood is down. The user growth came down and the transaction-based revenues came down. And so Robinhood got sold off. Hood only down 3% right now. I don't think it will be as bad tomorrow. Yeah, I agree. Sean says fire the CEO. That's a take. That's a hell of a take. Fire the CEO. Wow. Guys, is my camera being like a potato? Is it bad right now? Is it bad? Hold on, let me check on my side. Is it that bad or is it? We're gonna go to PayPal next. No, it's good. It's good. Okay, cool. All right, let's look at PayPal's. PayPal's. What is PayPal? PayPal IR. So that's Robinhood. We're gonna stream them in about 20 minutes. We'll listen to what they have to say. But let's look at PayPal. Now, PayPal is also really confusing to me. Again, I haven't gone through the numbers. I'm about to go through right now with all you guys. I am very confused why the street sold them off 7% for not missing anything. Now, let's go through this update. Maybe there's a miss that I'm not seeing here. Investor update. Is this the doc? Yeah, this is the doc. Okay, here we go. PayPal. And let me know in the chat if there's something about PayPal that's really bad that I'm not seeing at all. Okay, so Q2 revenue at the high end of guidance with double-digit TPV growth at 24% non-GAAP EPS. Revenue of $7.3 billion, growing 7%. So that's what the street kind of expected. Street expected 7.29 or whatever. EPS of $1.16. So that's 24% year over year. That came in line with expectations. Returned $1.5 billion to stockholders through share repurchases and $4.9 billion on a trailing 12-month basis. That is also one of the bull cases that they're reducing shares outstanding by 4%. They're buying back their shares. And then where's their user growth thing? So we were expecting 433 million users. Where do they have that here? They don't have that here. Total payment volume is 377 billion. That's up 11%. 6.1 billion in transactions. That's up 10%. 1.6 billion in non-GAAP operating incomes. 20% increase. Okay, where's their users? The street expected 433 million. I feel like they're hiding it in here. Where is that? Okay, total payment volume, because that might be the thing that. Oh, did they go down? Oh, I think they went down. Yeah, they went down. So active accounts went down by 2 million. Robinhood and PayPal lost. Am I reading this wrong? So 433 million in Q1 2023, 431. I wasn't the best at calculus, but 433 minus 431 seems like 2. So they lost 2 million accounts. I mean, that's bad, but like, is that bad enough to drop at 7%? Is that like the worst thing in the world? Revenue at the high end of guidance. Revenue came in well. Net non-transaction operating expenses declined 11%. So they're being a little bit more efficient and financially disciplined. Continued operating margin expansion. This is down, right? Is this down? GAAP operating margin is up and non-GAAP operating margin is down just slightly. I don't think it's enough for the street to just kill it. Non-GAAP EPS grew 24%. Yeah, I don't know. I mean, am I missing something? It doesn't seem like, yeah, they lost some users. Their operating margins are down just a little bit on a non-GAAP EPS basis. I don't know if that is enough to kill the stock. I guess the street wanted more. So they're definitely down on their active accounts. There's 2 million of a loss. Number of payment transaction is up, even though they lost 2 million. But again, that could be manipulated because you're dividing it by less on the denominator side. Total payment volume is up 11%. Total take rate, 1.94%. That's down just a little bit. Transaction margin, they still have a 45.9% transaction. I don't know. I'm not sure why PayPal is down. I mean, I guess we're going to have to hear more on the call. I guess the street wanted a lot more, or the street is just annoyed with Fitch and they're giving them a little bit more on a worse level. Losing users on a margin-based business is bad. I agree. That is bad. So, okay. So I guess 2 million is my question. Is that enough for the street to be like, oh my God, PayPal's going to shit? I guess, you know what accelerates the 2 million user loss is the increased competition that PayPal is supposedly having. FedNow, SoFi, just the fintech space in general getting more competitive. Cash App, Zelle, obviously Venmo, PayPal owned. So I guess from that perspective, same thing with Robinhood. Losing users when there's more competition for brokerages and for payment transaction, I guess, companies that help you, pay for stuff. That could be definitely a reason for why the street feels that is a trend that could continue and not get fixed over time. And if that's the case, then that's not good for the stock. PayPal down 7.4%. PayPal's not recovering at all. Robinhood recovered a little. Robinhood was down 7%. Now it's down 3.8%. It's 4 cents away from getting back to 12. PayPal just took a dump, $67 right now, from $73. Okay, so we're definitely seeing a decline on PayPal and Robinhood. To be honest, highest quality investors don't use Robinhood. I agree, which is why, again, Hood for me is not an investment; it's a trade. It's a simple trade, and the thesis is simple. Like, also, I want to talk one thing about Hood. If it goes back down to $9, they will have $5 billion in cash, and the market cap will be $8 billion. You are literally buying cash if it goes back to 9. So if it goes back to 9, I have to think really deeply on if the declining user growth is enough of a bear thesis for me to not be buying a company that is basically trading at cash, which is the whole reason I pulled the trigger in the first place. I mean, outside of all of the qualitative reasons I liked Hood, the trigger point was $6.5 billion on cash, $8 billion market cap. This is stupid. Let me buy it. There should be some upside here. Now, granted, if that upside is deteriorating or is not possible because of a business that's deteriorating from its user growth or from its core service, is people trading, yeah, that destroys the thesis. But we'll see where it goes from there. Sean says, to be fair, the Fitch downgrade is probably making for some sensitive institutions. I agree. I really agree with this. By the way, everyone should check out Sean's channel, Invest to Live. Let me give a shout out to Sean as well. He is building a new website called Job Jeeves. He is basically building the next biggest competitor to LinkedIn and Twitter. And he did a great video today on Fitch that I was able to catch a little bit of in the car. You guys should definitely check it out. If you're in the market for a job, if anyone's from Robinhood and you got fired because they did that 7% of layoffs, Jobs Jeeves is where you want to go. Super, super, super simple to search for anything, find a new job. He offers recruiting, all that stuff. So you guys should definitely check it out. The Fitch thing that happened, I believe, sent a shockwave through the system of reasserting that the United States may not be the best place to borrow money from, even though it is kind of laughable because in 2011, when it came down 15%, the S&P 500, the reason that happened is because it's so ironic because I was listening to Barack Obama give a address, like a kind of State of the Union type of thing, or a press conference from 2011. Why was I listening to this? Because I'm a nerd, okay, and I like political stuff. And so he's talking with Speaker Boehner, who's the Speaker of the House of Representatives back in 2011, to come to a debt ceiling negotiation deal. They are golfing, they are smoking together, they are drinking, they are doing everything together. And so Obama's like, the deal is done. We're going to raise the debt ceiling. We're good. 2011, it's going to happen. Last second, Speaker Boehner pulls out. He says, we're not doing the deal. Because they just hated working with the Democrats that much. Obama gets pissed out of his mind. So they come up with a deal, but the deal in 2011 is so stupid. They come up with like some committee to be able to figure out how to like negotiate a debt ceiling, which is not a deal. It's like another bureaucratic way of solving the issue. And so that's when the decline in credit ratings made so much sense because the deal was so stupid. The debt negotiation we got, even though it took 5 months from like February to May, it was a pretty bipartisan oriented deal, and it actually promises reducing the deficit by $1 trillion. And so for Fitch to come out and downgrade us now, it's just a little weird. I can understand it because obviously 31.5 trillion. I mean, like, what, we're gonna have $50 trillion in debt in the next couple of years? Like, it's insane. And our debt to GDP is above 100%. We're trading at 118% debt versus 100% growth in GDP, which is not good. We're losing more than $1 for every dollar we bring in. But it was very weird for them to put that out in this moment. And so that might have been something for fintech in particular that affected the stocks. PayPal now down almost 8% to $67.41. Robinhood at $12 after hours. So the dip is being bought up a little bit on Robinhood. Again, that user growth decline, I guess, was the biggest thing for why the street sold them off. Palantir is down a little bit after hours. In general, this was a bloody day for the market, not a horribly bloody day. Enphase got pretty tanked this morning as well. They're up a little bit after hours, but they went from 153 to 140. So overall, Tesla's down a little bit, Microsoft's down, Google's down, Meta's down, but PayPal and Hood are the stories for today. Down. PayPal is also a big retail-friendly stock. PayPal is a very big retail-friendly stock. A lot of people consider their stock to be Meta at $88. Probably not a 3x like Meta going from 88 to 316, but PayPal reverting to its mean. By the way, let's look at PayPal's chart. PayPal's chart is really interesting because they've grown substantially from 2018, but obviously the chart is not where you would want to see that. So 2020 they were at $120. April 24th they were at $120. They climbed to 300, which I agree was probably insane, and they come back down to $73. Last time they were there was March 2018. August 2018 they were at $85. And so right here, 2018. Last time they were at this level. Now we're at $67 after hours. Last time we were here, 2017. Right here, around August 2017, September 2017, we were at $65. That's where we are after hours. So the market is basically saying for the past 7 years, they do not deserve any multiple, any premium on the stock, which is, a little tough to fathom. Robinhood, Hood stock, let's look at them. Again, they ran up to $80 a share at one point. There's something ridiculous, yeah. And so they've been stuck in this channel from $9. No, they started, so let's call it $11 March 11th, 2022. Today they are $11 as well, roundabout $12. So they were stuck from 8 to 9 for the better part of the last year, and this in the past couple months we've seen a little bit of a rise. And so it is probably very easy for Robinhood to fall back down to the $9-8 range if the street feels the thesis is gone. All right, let's see what we got in the comments. Unity is up. Unity triple. Oh, Unity at earnings. Okay, where's Unity right now? Unity stock is at $44. Okay, so it's up 6% after hours. That's not bad. What else do we have? It's obviously an industry issue and not a company issue. That might be the case here. Dying company, nothing has changed. The stock market rewards growth in the future. Both companies are lacking. They're definitely lacking massive growth. I don't know if at these valuations they need to show massive growth. Obviously, the stock market feels like they need to show massive growth, but I'm not sure if they truly need to show insane growth to get back to 2019 levels. Hood lost 10 million users. No, Hood lost 1 million, not 10 million. Hood is at 10.8 million, not down that much. It's simple. They sold everything and anything today massively. It's all BS and it will be up tomorrow. Yeah, we'll see. I think the decline right now is I'm going to pull up Hood's earnings call. It's going to start in 7 minutes. I think it is much more macro related. I do not think the Hood and PayPal decline is truly stock. I mean, again, it's not easy to put up 3 cents per share of profit after you lose 1 million users. Like, let's think about it from the opposite side. Let's say you lost 1 million people using your product. They just didn't even check it for the month. They were like, I don't even care about Robinhood. I downloaded it. I checked it in the last month, so I'm a MAU. Now I don't check it. I don't do any trades, nothing. And still, the company gets to those 3 cents of profitability. I mean, like, you got to give them a little bit of credit for being able to do that. But the street, obviously, some things outweigh the other. And so I think it could be a little bit more macro related than anything else. But we'll hear from them on the earnings call and see how they justify some of the decline that we got. Altec, thank you for the $10 super chat. MAUs are down quarter-over-quarter, but up from May. We saw 10.6 million in May and now 10.8 million in June. Everything else is up a lot. That is also true. We did see 10.6 million in May, so we did increase the MAUs by 200,000 in 10.8 or in June, and so we averaged 10.8 for the quarter. But we were down 1 million from last quarter. Again, it's so confusing to me because February to May is when the market was still down. May to June is when the market went up. So for us to lose users in those 3 months, it is a little concerning. It's a little weird to see that happen. And I've been seeing Robinhood ads everywhere as well. So I know they're definitely accelerating customer acquisition. Now, what Q3 is what month? July, August, September, correct? Yeah, July. So these 3 months are going to be very important to show. If we show next quarter declining user growth again, it's not going to be good for Robinhood. It's probably not going to be the best for them. Hood will climb above 13 tomorrow. If you can be profitable with dropping members, imagine once Powell starts printing and also when they enter the UK market. This is correct. The only counter argument against that is the bears will say the reason Hood is profitable is because of net interest incomes, which is fair. Again, my thesis is if that declines, stocks go up, more people trade on Robinhood. Now, if more people don't trade on Robinhood, my thesis is wrong. But if people do, then that should be okay. PayPal's bouncing back a little. All right, so we got 3 minutes left until the earnings call. Let me look at the charts one last time, and then we'll take a look at what Vlad and company have to say about the earnings decline. Robinhood, 11.85 after hours, so it's down 5%. PayPal up from $67 to $68 after hours. There's a pretty big red candle. I mean, that's a decline. that's red. Granted, the whole day was red, but that's it. Wow, S&P below 450 after hours. S&P is below 450. Psychologically, that is a big deal. Traders would love seeing it, especially if you're bearish. You should love seeing below 450. 450 was psychologically very important. We got there just a week ago with CPI coming in at 3% and core decreasing 0.2% month over month. So that is actually, it's down for the S&P. We haven't seen 440s in like at least 3 weeks on the S&P 500. So we are down for that. Did you see the buyback in PayPal? Yeah, they bought back 1.5 billion in shares. Look, this is good news. None of this stuff is bad. It's just the market is the market today, and the market does not like it. PayPal does need to announce their new CEO, so maybe the lack of announcing leadership direction could also be a reason why it's down. Yeah, it's not. This is why I didn't put 50,000 in Robinhood. I put $5,000 and said, let's take a little gamble here. So if you are doing options on some of these more speculative recovery plays, you definitely don't want to go all in, because if you do, it can get a little raunchy here. So we should have the earnings call start in about 3 minutes, and then we'll go from there. Do you think we squeeze? No, I don't think the short interest on Robinhood or PayPal is enough to cause a squeeze. I don't think that's going to be the case. Oh, Shopify also had earnings. Shopify beat EPS by like 40% or some ridiculous number. The stock is also down a little bit after hours, not a lot. Shopify had a good quarter from the basic numbers I saw. I didn't go through the deck and didn't go super deep into it, but not enough for the market to reward it, not enough for the market to kill it, which is, I guess, at least in today's day and age, what you want out of earnings. Just think about what will happen when they expand into the UK. Yeah, I mean, look, the issue with Robinhood, it's not just about, by the way, the call is going to start in 2 minutes. It's not just about expansion. It's about maintaining those users. Because again, the problem is Robinhood attracts users that aren't like, they're not financially sophisticated, right? They're just buying and selling for the first time. So if that's the case, you've got to really incentivize them to stay. And even if you go to the UK, they have to maintain those users. That's the biggest issue. And if they can do that, that's the most important thing. Vimeo. Yeah, I didn't know Vimeo was publicly traded either. I saw their stock. The CEO resigned, I think, because the stock is down like 70-80%. They went public in 2021. Vimeo, they sell enterprise like cloud video solutions. I'm like, I get the business, but it's like, you can't just use YouTube. Like, really? Is it that serious? I guess companies don't want to use YouTube internally, but I don't know. I don't know if Vimeo is enough to be a public company. I'm like, it's Vimeo. Like, really? It's a public stock. And who's buying? What fucking investor buying Vimeo? What institution's excited about Vimeo? Like, it's very interesting. Okay, so the call didn't start yet. You guys should be able to hear it in a second. Now let's see. We got Amazon and Apple tomorrow. They're going to determine a lot of this market. Amazon and Apple are going to determine if shit hits the fan or if things are okay. So we should be getting into the call now, and let's see. Why did they pick this music? This is like it's like a calm, relaxing music as we lose 1 million users every quarter. There you go. Okay, they should be starting in a second. Apple and Amazon are after hours. They're always after hours. This is what Ken Griffin plays to Vlad before bed. Oh my God. Oh my gosh. All right, let me play it again. It should be starting at 5, right?
Good day, and thank you for standing by. Welcome to Robinhood's second quarter 2023 earnings conference call. At this time, all participants are in a listen-only mode. After the speaker's presentation, there will be a question and answer session. To ask a question during the session, you will need to press star 11 on your telephone. You will then hear an automated message advising your hand is raised. To withdraw your question, please press star 11 again. Please be advised that today's conference is being recorded. I would now like to hand the conference over to your speaker today, Chris Cagle, Head of Investor Relations. Please go ahead.
Thank you, Gigi, and thank you to everyone for joining Robinhood's Q2 earnings call. With us today are CEO and co-founder Vlad Tenev and CFO Jason Warnick. Before getting started, I want to remind you that today's call will contain forward-looking statements. Actual results could differ materially from our expectations, and we have no duty to provide updates unless legally required. Potential risk factors that could cause differences, including regulatory developments that we continue to monitor, are described in the press release we issued today, the earnings presentation on our investor relations website at investors.robinhood.com, our Form 10-Q filed May 10th, 2023, and in our other SEC filings. Today's discussion will also include non-GAAP financial measures. Reconciliations to the GAAP results we consider most comparable can be found in the earnings presentation. With that, let me turn it over to Vlad.
Thanks for the intro, Chris, and thanks to everyone for joining us today. Last week was the 2-year anniversary of our IPO, and I'm excited to announce an important milestone today. In Q2, we reached GAAP profitability for the first time as a public company. I'm incredibly proud of our team for the resourcefulness and tenacity it took to ship innovative products, serve customers, and manage expenses to reach this level. Let me tell you more about our progress in Q2, starting with our business results. Customer assets under custody grew to $89 billion in Q2, up 13% from Q1, driven by higher equity valuations and continued net deposits. In July, customer assets continued to grow by several billion to over $90 billion. Looking at net deposits, we had over $4 billion in Q2, translating to a 21% annualized growth rate. This brings the total over the past year to over $16 billion, as customers continue to trust Robinhood with billions of their investment dollars. Looking at our financial results, in Q2, we grew total net revenues to $486 million, up 10% from Q1. And by keeping our costs lean, we drove nice operating leverage in our business, with adjusted EBITDA margin increasing to a new high of 31%. These results contributed to GAAP net income of $25 million and EPS of positive 3 cents. I'd also highlight that 2 new products I mentioned last quarter, stock lending and instant withdrawals, continued to accelerate. Each had Q2 revenues that grew another 20% above their Q1 levels. The combined annualized Q2 revenue of these 2 products is over $90 million, which is roughly the size of our equity trading business. This is exciting progress, and I'm incredibly proud of how well our team is executing. Now, let's turn to our 2023 roadmap, which, as you know, we've organized into 3 areas: deepening relationships with our customers, innovating for our active traders, and launching new growth opportunities. Let's first talk about how we're deepening relationships with our more than 23 million existing customers. Our goal is to serve the entirety of our customers' financial needs. We started with trading and investing, and more recently, we launched spending, saving, and retirement products. We track our progress here by looking at net deposits and ARPU. In Q2, net deposits grew at a 21% annualized growth rate, and ARPU increased to $84, the highest level in the past 2 years. We're also making great progress growing assets per customer. Over the past year, AUC per customer increased 37% on average and 88% for Gold customers. One focus has been helping customers save and invest their long-term money. As a reminder, in January, we launched Robinhood Retirement, the first IRA with a 1% match, no employer necessary. And it's great to see that IRA assets are now close to $1 billion. We believe retirement can grow into a much larger part of our business, especially as we add additional products like advisory. Last quarter, I mentioned that we're really happy with the progress we've made with Robinhood Gold and that we're going to be adding even more features and value to the offering. To that end, we are introducing a 3% IRA match for Gold customers, 3 times our standard 1% match. We believe this offer makes Gold incredibly compelling for retirement customers that aren't already Gold subscribers and will also help us grow a retirement business. Gold Cash Sweep, which offers customers up to $2 million in FDIC insurance and among the most competitive yields on cash, is also continuing to grow. Gold Cash Sweep balances grew nearly 40% in Q2 and 130% year to date to reach $11 billion. Last week, we increased the interest rate to 4.9%. As we've attracted and engaged more Gold customers, we've seen them deposit more into their Robinhood accounts. And this continues to drive strong ARPU and revenue growth from our Gold customers. With our competitive 4.9% rate on cash and the new 3% IRA match, we're starting to spin this flywheel even faster. Now, let me talk a bit about the X1 acquisition. We view credit as a strategic opportunity to both help customers and diversify our business. Many of our 23 million customers are credit card primary, and we also see an opportunity to go down market and help younger people build credit. Right now, for example, if you're an immigrant or a student, it's hard to get credit, even if you have the salary and earnings potential to support it. This is one of the problems we're excited to solve. And by doing so, we believe we will grow our customer base, diversify our revenues, further deepen our relationship with our customers. After exploring the credit space for several years, with X1, we finally found a team that has the right values and DNA to build and scale a category-defining consumer credit business. X1 provides their 80,000 cardholders with an awesome stainless steel card, attractive customer rewards, and a sleek and user-friendly mobile platform. The team is working hard to ship a great new Robinhood card that we're excited to offer to our 23 million customers, and we'll expand from there. Now let's discuss active traders. As you know, over the past year, we continued to aggressively ship products and features to make Robinhood the best destination for active traders. These include advanced charts, cash accounts, strategy builder, stock screeners, and most recently, Robinhood 24-hour market. With 24-hour market, we are the first U.S. retail brokerage to offer 24/5 trading of single name stocks. We finished the rollout to 100% of our customers in July, and we love the early uptake we see. We've seen strong volumes in our extended hours offering, particularly during earnings season. And Robinhood 24-hour market makes it even easier for customers to trade whenever they want. We're excited to continue to expand the selection of names we offer, and we will be adding 9 more tickets quite soon, bringing our total to 52. As we continue to enhance the experience for active traders, we're seeing our market share of retail trading grow. Last quarter, I mentioned that we were happy with the trajectory that our options trading product was on. We were starting to turn more of our attention to our core equities business. In addition to 24-hour market, we shipped several tools and enhancements for our active equities traders, including longer chart history, returns comparison tools, and our awesome new screeners and scanners. And just a few hours ago, we rolled out instant deposits and cash accounts to all users. Customers love these improvements, and we're seeing that in our market share. In Q2, equity market share was up 15% from a year ago, and our options market share was up over 20% from a year ago. So far in Q3, our market share continues to move higher in both equities and options, and we're working on many more improvements that we can't wait to share with customers. Turning to crypto, we continue to innovate and grow market share while staying mindful of applicable regulations. Our goal is to be the safest, most trusted place for customers to hold, trade, and transact with their crypto. We see our recent launches of Robinhood Wallet and Robinhood Connect resonating with customers, and we look forward to continuing to invest in crypto. The third part of our 2023 roadmap is exploring new growth opportunities to broaden the scope and geographical reach of our products so we can add more customers and increase our revenues over time. We remain focused on our ambitious goal of launching brokerage operations in the UK around the end of the year. As you know, we have an existing license in place, a brand that resonates, and experienced leaders like JB McKenzie running the effort. We've been spending a lot of time with customers and are starting to hire key positions on the ground, including bringing on Jordan Sinclair to lead Robinhood UK. We're getting even more excited to drive innovation in the UK market, like we've done in the US. Another business we recently launched is Sherwood Media, a new media company that is focused on providing the best financial content covering the markets, economics, business, technology, and the culture of money. Our goal is to build on the success of Robinhood Snacks, which is one of the largest financial newsletters in the US with over 10 million weekly readers. We've already started signing multi-year advertising partnerships with NASDAQ, CBOE, and other partners. We're excited about our progress across multiple geographies and business lines. We believe these investments will enable us to serve more customers while also growing and diversifying our revenues. As I reflect on all that Robinhood has accomplished so far in our history, I'm energized by our even larger potential over the next decade. We're really excited about the roadmap ahead of us, and there's so much to do. We see a huge opportunity to innovate for our customers, grow assets, gain market share, and change the industry for the better as we democratize finance for all, our 23 million customers and many more to come. With that, I'll turn the call over to Jason.
Thanks, Vlad. It's good to speak with everyone today. After growing revenue for 5 straight quarters and getting lean on costs, in Q2 we reached GAAP profitability for the first time as a public company. I'm incredibly proud of our team for all of their progress over the past year, transforming the financial profile of our business and positioning us to drive long-term shareholder value. While we're excited about reaching this milestone, we're just getting started on the journey to drive higher levels of GAAP EPS over time. We remain focused on investing for growth to add new revenue streams like securities lending and instant withdrawals, as well as gain market share in our existing businesses. At the same time, we're working to get leaner in ways that don't detract from our growth. For example, in Q2, we made some targeted reductions across a few teams where we saw increased productivity and opportunities for greater efficiency. We're confident that our growth and efficiency efforts can drive great outcomes for customers and shareholders over time. Let's now look at how our business grew in the second quarter as we make progress on our mission. We measure our progress in terms of assets under custody and net funded accounts. Our customers' assets under custody increased 13% sequentially in Q2 to $89 billion, primarily due to higher equity valuations and customers continuing to deposit money into Robinhood. Looking at net deposits, they were $4.1 billion in Q2, which translates to a 21% annualized growth rate relative to Q1 AUC. We believe these resilient customer net deposits position us really well for continued asset growth as markets rise over time. Turning to net funded accounts, which represent unique customers on our platform, they increased to 23.2 million in Q2, up 70,000 from last quarter and 310,000 from a year ago. Additionally, we are excited about the growth we are seeing in our retirement product, which we launched in January. We now have over 325,000 funded retirement accounts, up 75,000 from last quarter. And Gold subscribers increased for the third quarter in a row to over 1.2 million, up about 60,000 sequentially and 150,000 since we launched the Gold Yield high yield offering. Looking at our financial results, we generated positive GAAP net income of $25 million in Q2, and EPS was 3 cents. When we look at our 37-cent increase from a year ago, it's great to see the broad improvement across revenue, OPEX, and SBC that led to the Q2 result. In addition, we have continued to drive profitability higher on an adjusted EBITDA basis. It grew to a new high of $151 million in the quarter, and our adjusted EBITDA margin also reached a new high of 31%. We are excited about the progress we've made on margins, with adjusted EBITDA margin up over 55 points from a year ago. Now let's review Q2 revenues. Total net revenues were $486 million, a 10% increase from Q1, as net interest and other revenues increased during the quarter. Q2 ARPU was $84, up from $77 last quarter and the highest level since 2021. Transaction-based revenues were $193 million in Q2, down 7% sequentially, primarily due to lower crypto volumes and lower options revenue per contract. Moving to net interest revenues, they were $234 million in Q2, up 13% sequentially. The increase was driven by higher interest earning assets, short-term interest rates, and securities lending activity. Q2 interest earning assets were $26 billion, up 16%, or $4 billion sequentially, primarily driven by Gold customers continuing to bring more deposits to Robinhood. Looking ahead, we anticipate Q3 net interest revenues will increase in the zone of $15 million versus Q2. This outlook assumes securities lending revenue in line with Q2, the addition of X1, and today's level of balances, deposit rates, and Fed fund rates. Of course, our Q3 result could be higher or lower depending on how the quarter plays out. Moving on to other revenues, they were $59 million in Q2, up $33 million from Q1, primarily due to seasonally higher proxy revenues. Looking ahead, we anticipate Q3 other revenues will return to the mid-$20 million zone, given typical proxy seasonality. I also want to share some color on what we saw in July. Accounts and assets continued to grow as customers deposited into their accounts and equity valuations increased during the month. July net deposits were roughly in line with the Q2 monthly average. In addition, as Vlad alluded to, we saw trading volumes pick up in equities, options, and crypto compared to our Q2 monthly averages. Finally, margin and cash sweep balances continue to grow from their Q2 levels. We're glad to see our customers continue to engage on the platform and look forward to sharing our full monthly metrics in a couple weeks. Now let's review Q2 expenses, starting with OpEx prior to SBC. It was $357 million in Q2, at the lower end of our prior outlook range. Looking forward to the second half of the year, we're getting more efficient. So even while onboarding X1, we are keeping the midpoint of our full year outlook range unchanged. We're also tightening our range as we're now halfway through the year. Taken together, our updated outlook for 2023 OpEx prior to SBC is a range of $1.43 to $1.47 billion. Turning to SBC, it was $109 million in Q2, right around the lower end of our prior full year outlook range. Looking ahead, given the progress we've made through the first half of the year, we're lowering our SBC outlook again this quarter. Our updated outlook for 2023 SBC is a range of $900 to $940 million, which implies SBC will continue to improve in the second half of the year. Our progress here means that our outlook for 2023 dilution has also improved. We now expect our diluted share count, which was 961 million at the end of 2022, to increase by 3% or less this year. Turning to capital management, our balance sheet is strong with over $6 billion of cash and investments. We use a small portion of that to run our business day to day, so we have billions of excess cash to deploy. In addition, we are now profitable on a GAAP basis, and we generated nearly $400 million of adjusted EBITDA over the past 12 months. So we believe we are well positioned to deploy capital over time to drive growth and shareholder value. One way we deploy capital is M&A that accelerates our long-term product roadmap. In Q2, we acquired X1, which we see as a capital-efficient way to bring a great new capability to our customers. The X1 platform provides their roughly 80,000 cardholders a no-fee stainless steel credit card with attractive rewards on each purchase, and we're incredibly excited to begin offering credit to Robinhood's 23 million customers. Looking ahead, we continue to look for M&A opportunities like this that can complement our organic product development efforts and are a good strategic, financial, and cultural fit with Robinhood. Another way we plan to deploy capital over time is through share repurchases. As you know, we've been working for the past 6 months to purchase the 55 million Robinhood shares that Emergent Fidelity bought last summer. We continue to have discussions and will update you when we have more to share. In closing, I'm really pleased with the financial progress we've made over the past year. while continuing to deliver new capabilities and enhancing customer experience. Q2 was our first quarter of GAAP profitability as a public company and fifth consecutive quarter of revenue and adjusted EBITDA growth. And we're not done. We continue to focus on driving profitable growth over time. With that, Chris, let's go ahead and move to Q&A.
Thank you, Jason. For the Q&A session, we'll start by answering shareholder questions from Say Technologies. These are ranked by the number of votes. We'll pass over any questions that we already addressed on this call or in prior quarters. We'll also group together questions that share a common theme.
Here we go.
After that, we'll turn to live questions from our analysts. So I'll kick it off with our first question from Say. This one's for Jason. Suraj P. asks, what is the reason top management keeps selling stock?
Yeah, thanks for the question.
Good question.
We want to have management align their interests with our shareholders, and we think our compensation structure does that. So most of our management team's compensation is in the form of stock. And because of this, it's normal for our management team to sell a small portion of their holdings as income. So management sets up automatic selling plans. They're called 10b5-1s well in advance of the trades that you might see come through. These are automatic, and they sell small portions of their stock over time. As you look across our management team, you'll also see that we continue to be large holders in Robinhood stock, and certainly we're highly motivated to create shareholder value.
Thanks, Jason. The next question comes from Lance G., who asks, can you provide an update on the 24-hour trading and how it's going? Vlad, do you want to take that one?
Sure. We were super excited to launch 24-hour market. We were the first U.S. broker to offer 24-hour trading of single name stocks. And we rolled it out to 100% of our customers in July, just a few weeks ago. And we'll be adding 9 new tickers soon to trade 24/5. Plus, especially for those of you that are in the New York City area, you may have seen us doing some marketing around it. We're hearing great feedback from our customers, particularly those that trade more actively, and we're continuing to invest to make the offering even better.
Great. Thank you, Vlad. The next question is from Atanu M., who asks, do you have a plan for share buybacks to regain investor confidence? Robinhood has been way under IPO valuation for more than a year now. What is your plan to rebuild investor confidence? Jason, do you want to take that one?
Sure. Thanks for the question, also the feedback. There's a number of ways that we're working on delivering value for shareholders over time. First, we're investing organically in our business, and you hear us talk about the new products that we've recently delivered, as well as ones that are on the roadmap, and we're super excited about that. Second, we've got a super strong balance sheet, and we're using it for M&A as a way for us to move faster. You saw that this quarter with our acquisition of X1. I also think there's more opportunities like this, and we're looking out for them. And as you mentioned, share repurchases is another lever. And as you know, we continue to work on purchasing the 55 million shares that were acquired by Emergent Fidelity. And over time, we'll consider other ways to return capital to our shareholders. In terms of our more recent financial progress, we've hit some pretty big milestones for the business. Our revenues in Q2 were up over 50% from last year. Our costs are down hundreds of millions, and this led to us generating nearly $400 million of adjusted EBITDA in the last 12 months. We've also reached a new high of 31% adjusted EBITDA margin this quarter, so really happy about that. And of course, really proud that we reached GAAP profitability for the first time as a public company with 3 cents per share. So all in, I think we're in a great position, and we've got really good momentum to deliver even better results for customers over time and shareholders.
Thanks, Jason. The next couple questions, I think maybe Vlad and Jason can share. So Anuj B. asks, can you talk about the acquisition of credit card provider X1? How does this strategically help Robinhood with future plans? Was X1 a profitable company at the time of the purchase agreement? And will this bring more users and gold users to Robinhood? And then Omer D. asks, how will X1 be integrated into Robinhood exactly? Vlad, do you want to start?
Yeah, I'd be happy to start. We're really excited to work with X1 and the team over there to build a category-defining consumer credit business. We think the opportunity is incredibly strategic for Robinhood and incredibly useful for our customers. one of the goals for Robinhood, as I mentioned in earlier in the call, is we want to help customers not just trade and invest, but perform a wide variety of their financial needs. And we want to be their financial home and provide easy to use, accessible interfaces and high value products. Credit is a space that's incredibly important to many of our customers. It's something that we've been exploring for many years, and it directly addresses a lot of feedback that we've been getting from customers. A lot of our customers want a Robinhood credit card from us, and it aligns well in our mission. We believe that we can actually do something really good here and provide credit to people who haven't always had easy access, young people, students, and immigrants. And one of the things we really liked about joining with X1 is, like Robinhood, they think of this as a technology problem, and they leverage technology to build a simple and seamless user experience. So I think it's going to be great for customers, great for shareholders as we scale the product. And I'll defer to Jason for some of the financial details.
Yeah, thanks, Vlad. At the time of the purchase, X1 had about 80,000 cardholders. We haven't provided other details on their finances prior to the acquisition, because really we think the big picture here is that this deal is really about the opportunity to scale credit with our 23 million customers, and less so about X1's finances prior to the deal. Qualitatively, I'd say that their business was growing leading into the acquisition. We really like the quality of their credit and underwriting. So we're in a good spot, and their overall economics were also improving as well. In terms of integration, right now we are integrating the team, and we're working closely together on strategy. And Deepak is reporting directly into Vlad. So super excited about the potential here, and we'll share more updates as we make progress.
I'll also just say that I was at dinner with Deepak last night, and he pulled out a prototype for the new Robinhood credit card, and it's beautiful, and I'm very excited to share it with our customers.
Awesome. I look forward to getting one too. All right. So the next question is from Gustavo G, who asks, when will bonds, CDs, etc., be introduced to Robinhood? Vlad, do you want to take that one?
Yeah, thanks for the feedback. We're always listening to customers, and we want to make sure that we offer an expanding selection of products and services over time. I would like for you and for all Robinhood customers to be able to use us for all of your needs and not have to turn to other providers for investments. Today, we have some similar products. For example, bond ETFs and Robinhood Gold that offers 4.9% on uninvested cash with up to $2 million in FDIC insurance. But we know that there's more things that we have to add, and we're not going to stop. So over time, you'll see us continuing to listen to customers and adding even more investment options.
Great. Thanks, Vlad. And then the next one's also for you. Victor S. asks, when will AI capabilities begin appearing in the application?
Thanks for your question. AI is really important. It's a strategic shift in how Robinhood and many companies will have to think about operating their business, and something I think about a lot. Over time, to be competitive, we think every company will need to become an AI company. And I think given our track record of innovation and the technologies that make up the Robinhood offering, we think we're naturally positioned to become the leader in financial services for AI. We're excited to explore further how the technology can improve all aspects of the Robinhood experience for our customers and create efficiencies in how we offer our products and run our business. We're actively engaged also in recruiting high-quality talent to lead these efforts at Robinhood.
All right. Thank you, Vlad. The next question is from Richard B, who asks, is it too early to think that Robinhood is strong enough to do dividends? Jason, do you want to take that one?
Sure. I think we're in a really strong place as a company. We've got over $6 billion in cash and investments on our balance sheet. This is the 5th consecutive quarter of revenue and adjusted EBITDA growth. We've got record margins this quarter, and we just reached GAAP profitability. So I'm really liking the strength of the business and the position that we're in right now. In terms of returning value to shareholders, the traditional debate is share repurchases versus dividends. Personally, I'm more inclined to use share repurchases. And on that front, as we mentioned, we're working on purchasing the 55 million Emergent Fidelity shares, and we'll share more on that as we make some progress.
All right. Thanks, Jason. I think we have time for one more Say question. So I'm going to put together two.
Okay.
So Thomas P. asks, how has the growth in retirement accounts been? Have you been seeing many people transferring accounts over to Robinhood for the 1% match? And Michael A. asks, does Robinhood ever plan to offer employer-sponsored retirement accounts, such as 401ks? Vlad, do you want to take that one?
Yeah, I'd be happy to field that. Glad to hear of the continuing interest in our retirement offerings. We're very proud of our retirement offering. It gives our customers another tool that they can use to control their finances and build wealth over time. Customers love the 1% match, and today we announced the 3% match for our gold customers. The progress so far has been great. We're approaching 1 billion in AUM, and we have seen a big pickup in transfers from other institutions for the 1% match. Regarding the second question about employer-sponsored accounts, we think it's a space that is begging to be disrupted, frankly. We don't have this on the near-term roadmap, but definitely wouldn't rule it out. That said, there are also tons of individuals who don't receive a match from their employer today. So if you're an employee without a match, come to Robinhood and we will match for you.
All right. Thank you, Vlad. And that concludes our shareholder questions from Say Technologies. We appreciate our shareholders taking time to ask these questions
those were the
Vlad and Jason.
stupidest fucking
We look
questions
forward
I've
to
ever
more
heard.
next quarter. Now I'll turn the call over to Gigi to lead Q&A from our analysts.
Hopefully the analysts are better.
Thank you. As a reminder, to ask a question, please press star 11 on your telephone and wait for your name to be announced. To withdraw your question, please press star 11 again. Please stand by while we compile the Q&A roster. Our first question comes from the line of Devin Ryan from JMP Securities.
Hey, thanks. Good afternoon, Vlad and Jason. How are you?
How's it going?
It's going great. I guess first question on expenses. The headcount reduction that you noted, I think the press reported 7% in June. I'm assuming the one-time costs associated with that are in the guide. And then I guess I'm curious if there's any future cost savings that could come with that. It's not as material as some of your others, but I would assume there's still probably something related to that. Thanks.
Yeah, Devin, we did have some one-time costs on that reduction. It's included in the OpEx that we reported for Q2. And we viewed these changes as more of kind of ongoing management of costs. And so we did not exclude them from the calculation of adjusted EBITDA this quarter. And then in terms of kind of go forward, the effects of the forward cost savings on the reductions, as well as the additional costs of integrating X1 are all factored into the OpEx guide that we gave. And we tightened the range there and left the midpoint unchanged for the rest of the year.
Got it. Okay. That's fine. And then just some of the improvements you're seeing in investor engagement. Obviously, you mentioned some of the transaction activity recently, and we're seeing margin balances stabilize and improve. Still good deposit trends. It sounds like all that's continuing into July. Just love to get a little sense of whether this is really kind of in the active trader cohort or if you're seeing some of these improvements across the customer base more broadly. And then just at a higher level, kind of what you're hearing from different customer cohorts around their interest in trading. We've obviously been in a pretty tough and exhausting, I think, market for the past 18 months. Just where sentiment is today, and it sounds like some early signs of maybe recovery. So love to talk about that.
It's a good question.
Yeah, so I'll maybe lead, and then Vlad, you can weigh in a little bit as well. So, overall, the sentiment from our customers about Robinhood is improving. We talked about improvements in NPS year over year last quarter, overall up 20 points year over year on average, and up over 30 points for are more active traders, which is really encouraging. And we're continuing just to focus in on user experience and doing things like adding stock screeners and scanners, as well as Robinhood's 24-hour market. So I think our investors are noticing. Vlad mentioned an increase in market share year over year, both in equities up 15% and options up over 20%. And as I look at kind of deposits, customers continue to deposit their funds with Robinhood, over $4 billion in the quarter, and we continue to see strong deposits in July. And trading kind of picked up throughout the quarter. April, I think, was seasonally low, and then we just accelerated as the quarter progressed, and July was also good, as we commented in our more formal comments. So, overall, I would say that, the work that we've been doing, improving user experience and product selection is really showing through for our customers.
Yeah, I don't really have much to add. We've been really pleased by our progress. Jason mentioned and reiterated the market share gains, and I think the NPS improvements, particularly for active traders, have been really good. It's been really good to see that translating to market share gains across all of the assets that our customers trade.
All right, I'll leave it there. Thank you, guys.
Thanks, Evan.
Thank you.
Thank you. One moment for our next question. Our next question comes from the line of Dan Dolev from Mizuho.
Hey, guys. Great results. Thanks.
How's it going?
Hey, Vlad. How are you? Sorry, I had some issues with the phone, and I kept getting rebooted. So I really appreciate it. Great results, by the way. And I don't know if this was addressed, but we did some work that showed that you were gaining share from your competitor in crypto. So apologies if this was addressed. But is there anything you can call out on why you're gaining share? What is driving the share gains at Robinhood and crypto from your biggest competitor? And then I have a quick follow-up.
Yeah, I'll go ahead and take that. It's a little harder in crypto to measure market share. It's not as easy as it is with equities and options, but by our analysis, it does look like we're gaining share in the coins that we offer. In terms of why, I'd probably point to the value proposition. We think we're the best place for retail traders to buy crypto for the coins that we offer. And also, we think we've got just a great user experience. And so those are the two things.
Yeah, and I'd also add that we've offered customers great value in addition to a great customer experience. Like at Robinhood, you get more crypto for your dollar than at most of our competitors. And I think we've started to do a better job communicating that in the user interface. So, we're making it, incredibly clear we're trying to make it more and more clear to customers just how good of a value they're getting. And of course, I'd add that it's very important for us to be the most trusted and safest company in crypto. And I think, with all the turmoil in the space over the past year or so, I think that there has been a little bit of a flight to safety, and we're seeing that reflected in some of the market share gains you're seeing, and that's something that we'd like to continue to invest in.
Yeah, it's pretty amazing. Great stuff. And then a quick follow-up. I mean, great, progress on the retirement stuff. I mean, we're very excited about this here at Mizuho. Do you think that, is it a fair statement to say that over time, as this grows, this is going to show up in obviously like bigger impact on MAUs and it'll, the MAUs, it'll kind of cause a positive inflection in the MAUs because of the retirement
question.
Account, the retirement offering? Thank you.
Yeah, I'd be happy to field that. So MAUs did increase from May to June. Of course, when you think about all the things we've been focused on as a company on the product, they don't, because even retirement itself, it's sort of a passive long-term investing product and not typically a product that you associate with sort of like active trading or engagement. Although there's advantages for all types of investors with retirement products. Active trader investments, active traders are kind of a relatively small subset of the overall user base. So they drive a disproportionate amount of revenue, and making them really, really happy, you're probably not going to see that as reflected in the MAU metric. So we've made a lot of progress over the past year, and I think that's been progress that's sort of like on another axis than MAUs and trader engagement. That said, we are working on a bunch of things that we think will bring more customers and more transactors into Robinhood, and we do expect over the long run the MAU metric to follow. There's a lot of investments in place that we think will pay off for us there.
One of the things, Dan, that I'm really excited about is our continuing investment in Gold. That really deepens the relationships with our customers. We offer them 4.9% on their cash sweep balances, and as we announced today, a 3% retirement match. And so I think, as we deepen our relationships with our customers, as we expand our product selection, you're going to naturally see engagement tick up over time.
Yeah, I would agree. Great results. Congrats again. Thank you.
Thanks so much.
Thank you. One moment for our next question.
Not the best answer in my opinion, but
Our next question comes from the line of Steven Chubak from Wolfe Research.
Hi, good afternoon.
Good afternoon.
Wanted to start with a question on expense. You guys have done a nice job delivering efficiency gains while executing on the product roadmap. That said, your expense per employee is still relatively elevated when we benchmark versus fintech as well as retail brokerage peers. And wanted to get a sense as to where you see this metric trajecting as the business scales and as you expand your geographic footprint.
Yeah, thanks for the question. I'll take that one. I would generally agree with you. We've been focused on reducing our costs, and rationalizing the headcount. And our intention is to be lean and scrappy in the way that we grow our business and drive leverage to our business over time. And so we've been focused on, our cost per employee, as you pointed out. One of the changes that we made earlier this year is we moved from a stock-based award program that grants 4-year awards to a program that grants awards that vest over 1 year. And we think that that's a prudent way to do it. Another thing, as we look at our employee footprint, we're very heavily concentrated in higher cost areas in the U.S., and that represents an opportunity for us to balance out the mix of geographies that we work in as Robinhood employees. So it's something that we're working on, and I see that as an opportunity.
No, really helpful color. And speaking of operating leverage, did want to ask on the profitability outlook. Looking ahead, just now that you've reached GAAP profitability, remind us how you're thinking about normalized GAAP margins for the business at scale. And now that you've hit this milestone, was hoping you can give us an update on what the next milestone is that you're aspiring to.
Yeah, thanks for the question. Look, long term, what I'd tell you is that our objective is to maximize GAAP EPS and free cash flow per share. We're not giving any specific near-term milestone targets there, but when I look at the cost structure of our business, it heavily skews towards fixed costs and less so towards variable costs, which if you can manage those fixed costs really effectively as you grow your top line, you can deliver a lot of leverage to the bottom line. And so as I think about what kind of margins are possible for this business, I don't see any reason why we can't deliver the kinds of margins that you see at other financial services companies.
Very helpful. Thanks for taking my questions.
Yeah, you're welcome. Thanks for the questions.
Thank you.
Thank you. One moment for our next question. Our next question comes from the line of Michael Cyprys from Morgan Stanley.
Hey, Mike.
Hey, Vlad, Jason. Thanks for taking the question. Maybe just starting with the active trader opportunity set. I was hoping you might be able to update us on the opportunity set with futures. I know you guys have some plans to launch that this year, I believe. Maybe you can update us on the progress there and the build out. And then similarly on cash settled index options, where is that on the priority list and what sort of investment is required on your platform to enable that, or could you just flip switch and enable that today?
Yeah, futures is something that we're very excited about. We have been spending a lot of time thinking through how to make a really, really great customer experience, particularly on mobile, because as we look at the other offerings in the market, we think that there's a gap that we can fill with user experience, particularly on mobile. So we're spending a lot of time thinking through that, talking to customers, and we're putting together a really, really nice offering. Right now, we're estimating that it'll land in the first half of 2024. And the team is hard at work just making the product as great as possible for our customers. I think on the cash settled options front, we're also hearing that from customers that that's an attractive product and will enable them to manage their risk. That's also slated to land in the first half of 2024.
Great, thanks for that. And just a follow-up question on the X1 acquisition. I was hoping you could talk about your go-to-market strategy for how you're thinking about bringing the card offering to your existing customer set and broadening it out over time. Where do you think there's room in the marketplace for differentiation? And then can you talk about the underwriting process and the criteria there, just given some of the potential customers may not have much income or credit history? How do you get comfortable and manage the credit risk that this introduces?
Yeah, I think that's a great question. In terms of go-to-market, we kind of see two near-term opportunities that are interesting. One is just making a great card available to sort of the typical Robinhood customer. Robinhood customers, a lot of them are credit card primary, and we've been hearing lots of feedback from them on what types of offerings they would like. And we think that we can make something that's really, really compelling for them. We also see an opportunity, and I mentioned this a little bit earlier, for people who are younger, maybe college students, people with limited credit history, but reasonable earning potential, like immigrants, who have a hard time getting credit right now. And we think with technology and the underwriting capabilities that X1 has offered and has kind of been improving over time, we can build something really, really good for them as well. Of course, credit is an incredibly important market, large space. As a business, there's a lot of margin to be had there. So we're not just going to stop there. We want to build a suite of comprehensive credit solutions across multiple products for our customers. So this is just the beginning, but we think even within credit cards, there's a massive opportunity for us.
Yeah, one of the things that we were really excited about for the X1 team is just the quality of their team around underwriting. And we're really impressed with the high quality nature of their loan book. It's prime plus. So really, really happy with that. And, in terms of their underwriting, they look at things like income and credit bureau and the normal things that you'd expect the teams to be looking at.
Great, thank you. And congrats on the profitability milestone this quarter.
Thank you.
Thank you.
Thank you. One moment for our next question. Our next question comes from the line of Ken Worthington from JP Morgan.
Hi, good afternoon, and thanks for taking the question. I wanted to follow up on the monthly users question earlier, so a couple of points here. Maybe first, you have 23 million accounts and MAUs of about 11. So first, funded accounts were at their highs in 2Q, and market conditions have been improving in what I guess I'd call the more innovative part of the stock market this year. But MAUs were at their lows in 2Q. So I guess maybe first, does this relationship between MAUs and funded accounts seems sort of reasonable to you over time? And then maybe second, as we look at this, call it 10 million account gap between the two, what portion of these inactive accounts are ones that you think you can get to re-engage in normal market conditions, or if market conditions stay normal sort of over time?
Hey, Ken, thanks for the questions. One of the things that is a weakness of MAUs is it's measuring engagement just for those that engaged in the month. And for more active traders, I think that there's a fairly high correlation there. But for the broader set of customers, less so. And we provided a couple quarters ago some context that MAUs for all of Q4 was 16 million, and for the past 6 months was over 20 million. And so it's not that they're dormant customer accounts; it's that they're just not necessarily engaging every single month. And that's actually, for a lot of people, is actually a very normal and healthy amount of engagement. I do think over time, as we broaden our product selection and deepen relationships with customers, that you're going to see a more consistent relationship between MAUs and total funded accounts. But in the shorter term right now, we have seen those kind of move in opposite directions.
Okay,
I'd also add that there's sort of an asset dependency here, like the brokerage side with equities and particularly growth stocks. Like that market has been doing rather well in Q2, but crypto has kind of continued to soften. So you sort of see multiple conflicting things, and that can be reflected in the MAU numbers, because a significant percentage of our customer base is customers that trade crypto as well.
MAUs can moved up a little bit in June versus May, and it moved up a little bit more in July. So it appears to be stabilizing and kind of moving back up a little bit.
Great, thank you. And just 2 simple numbers questions. So thanks for the retirement and the gold account numbers. Any chance that you would give us fully paid SEC lending accounts and clients that have opted to use the cash card?
So fully paid is 1.5 million. Cash card, offhand, it's a couple 100,000, I think, that are funded, and about 1 million that have signed up. And I think the X1 acquisition really doubles down on the spending strategy. We want Robinhood to be a place to handle all of our customers' critical financial needs, and we want them to be able to spend with debit cards or credit cards, really at their choice. And so X1 and the cash card, I think, are a nice complement to each other.
Got it. Great. Thank you very much.
Thanks, Ken.
Thank you. One moment for our next question. Our next question comes from the line of Ben Badush from Barclays.
Hey there. Good evening, and thanks for taking the question. I wanted to follow up on actually Mike's question from earlier on X1. And Jason, you mentioned in the prepared remarks that I think there's some interest income expected to come, and that's related to X1. Can you maybe talk about the revenue profile you're expecting for Robinhood between interest income and interchange revenues, and how much credit exposure does Robinhood sort of take on with the acquisition?
Yeah. So thanks for the question. So the comments I made in the prepared remarks is that we expect interest income kind of all in, including X1, to increase sequentially in the zone of about 15 million. So X1 was a part of that. When I think about the geography for revenues for X1, you've got the interest income that you earn on revolving credit. That's offset by the cost of funding and presented net for interest income. You'll have some interchange revenue, but our accounting conclusion on that looks to be that it'll be netted with so that'll be in transaction-based revenue, but presented net. So that's kind of the accounting overlay for X1. In terms of the possibility, I mean, X1 has 80,000 cardholders at the time of the acquisition. We have 23 million customers that have a very nice credit profile, and I think over time we can make some strategy decisions that'll make credit really broadly available to our customer set, regardless of their background. So I think there's a big opportunity, and I'm excited to see the team work against that.
Yeah, I would just add that one of the reasons we got excited acquiring this company and this team versus pursuing kind of the traditional partnership credit card model is that if you think about X1, we do have access to both transaction-based interchange revenue and also the kind of more recurrent, sticky lending revenue. And this gives us an opportunity to build a diversified business and offer differentiated value to customers because we have access to a much greater percentage of the overall profit pool than we would under kind of your typical co-brand partnership model, which tends to be more one-time bounty-based coupled with interchange revenue share.
Got it. Very helpful. Thank you.
Thank you. One moment for our next question. Our next question comes from the line of Craig Siegenthaler from Bank of America.
Good afternoon, everyone. Thanks for taking my question.
Hello.
Hey, guys, can you hear me okay?
Yeah, we can.
Oh, perfect. Good. So thanks for taking my question. My question is on the UK brokerage launch. So I'm curious, how are you going to monetize this effort as the PFOB rules are different in the UK than in the US with payment for order flow ban?
Yeah, thanks for the question. We're mindful of the regulatory environment and all the geographies that we operate in. What I'd say is there's a number of revenue streams that are available for us. The team's still working out the details there, but certainly SEC lending and interest income. So there's a number of ways, and we do in the U.S. have a gold offering. So there's I think there's a good potential for this to be an attractive business on a unit economic perspective, with or without payment for order flow.
And a big focus for us has been, since we are a technology company, expanding internationally in a capital efficient manner without sort of excessive investments in headcount.
Great, guys. And just my follow-up, I know you don't report it exactly this, but I was curious also on the high-level trends in both cash equities and equity options on the revenue per trade trend in the second quarter of 23 versus the same period last year.
So on options, we are seeing kind of across the industry that the take rate on options trading has been coming down. This is really reflective of the overall lower volatility in the market, and also a shift that's been seen kind of industry-wide on a greater share towards ETF options. And so for the quarter in Q2, the take rate was 45 cents. That was the average for the quarter. It did come down as we progressed through the quarter, and has bounced back up in July slightly versus June to about 42 cents per contract. So that's what we've been seeing there, and we've been keeping an eye on it.
Thank you, Jason.
Yep, thank you.
Thank you. At this time, I would now like to turn the conference back over to Vlad Tenev for closing remarks.
Thank you, everyone, for joining us today. And we're very excited to continue innovating, delivering for customers. Thank you again for all the questions.
Thanks, everyone.
All right. So the only thing that really mattered from that call was, as you can see, the stock 1171. The only thing that matters is the MAU question. I think the question was decently answered, which is that a lot of the people that are active on Robinhood are active even if they don't check their portfolio every single month or do something every single month. The vast majority of traders are incredibly active. And so he said the correlation is not as significant. Also, that July numbers went up from June, which means we should theoretically be at 10.9 or 11 million for July. And then if we can keep that up in August and September, Q3, that question of user growth should not be as bad as it was before. Otherwise, I agree with Jesse. It seems like a great quarter. I mean, even the analysts were pretty much saying, hey guys, we had a great quarter. This is not one of those things where the quarter was like horrendous. Like most of these analysts would not be like, congrats on the quarter. Like, no, if the quarter sucks, the quarter sucks. Net interest revenues were up, GAAP profitability, transaction revenues declined slightly. Overall revenue increased 10% sequentially, quarter over quarter. It wasn't a quarter where you don't believe in Robinhood as a company anymore. User growth decline to me is just not enough, especially if it's 1 million users and those 1 million users don't influence the fact that the average revenue per user went up from $77 to $85. So even if they have less monthly active users, they're getting more bang for their buck from the users that are using the product. And on top of that, Vlad said, when crypto starts becoming more prevalent, we're going to see that trading volume go up as well. But you can't do anything if the trading volume isn't going on right now with cryptocurrencies or with equities. So Carlos, great comment as well. We'll be talking about all this on Finance Junkies in an hour, especially in this environment. Yeah, in this environment, I know the stock market's up year to date, but it's still a very challenging environment with everything we have going on. There's a lot of people that are still red on their positions. When those turn green, or when they see the potential for it to turn green, they're coming back to trading. And I believe Robinhood will be the premier destination for that to happen. Enough for the stock, in my opinion, by January 2025 to be $20. That is my price target on it. I don't think that's an insane price target. I might be out of my options before we get to $20, but that is my target. January 2025, I think Fed cuts rates, more trading, more users. $20 is where I'm positioning to be there. And I think at least 15, that's reasonable for Robinhood. Especially what the valuation would be at that point. $20 billion, $15 billion roundabout. It'd be a little bit more, maybe 22 billion. Like the market cap is not a market cap where you're screaming, oh my God, this company's massively overvalued, especially when it's profitable. In this interest rate environment, to be profitable really does matter. The market cap is 11 billion. It's going to be a little bit lower tomorrow. So it'll be maybe 10 billion tomorrow. 6.5 billion in cash. I mean, the sheer fact of Robinhood having 6.5 billion in cash, and if it goes back to $9, having $8 billion market cap, that will be a screaming buy again. And I do think there will be institutions and investors looking at that 6 billion in cash, 8 billion market cap, and being like, why are we not buying this stock right now? It's not one of those things where Robinhood was $20 and it's coming down to 12. It's 12, it's going down to 11, it's up from 8, up from 9 a month ago. It doesn't feel like it's on track to go back down to 7 and 6 and be in this horrible place, especially when the quarter was not bad. So overall, not a bad quarter. What was really bad was the day they reported this shit, which is today, after this whole Abercrombie and Fitch nonsense was reported with credit ratings. PayPal also continuing to go down $67.93 after hours. So not the worst thing in the world. No free money from the government. Correct. And September crypto wakes up. Robinhood's going to benefit from that as well. So, all right, guys, that's it for me. We'll see you guys in an hour talking about PayPal and Robinhood. Chris will be back today, and we'll keep going from there. Thank you, everybody, for joining me. Hope you enjoy the call, and I'll see you in an hour for Finance Junkies. See you.